Yo, it's your boy Vince Trade right here. In this video, I want to share my 7th step, which is currently leading me on my profitable journey this 2025. So I want to share this 7th step for those who are struggling in trading, not just in charts, in every aspect of trading. So if you know this video is for you, please pay attention. So guys, we're gonna get straight into the video right now. So the name of this 7th step is the 7 things you must do in your first year of trading instead of strategy hopping, because I know most of you like to strategy hop. Next week you're trading this strategy. Next week trading high city, next week supply and demand, next week February gap. So it's kind of crazy. So to be able to make yourself profitable, these are the 7 steps you must undergo. That's what I did in my first year too, although I was once like you guys strategy hopping before I could find my actual source. So I had to decide to put everything together for you guys to understand. So number one is to understand the basics of trading. So what are the basics of trading? Currency pair, how to go long, how to go short, that's sell and buy, what is margin call, what is stop loss, what is buy stop, what is sell stop. So those are the basics of trading that you guys need to understand before you guys can actually move on to the next. And let's say understanding the basics is going to take you like roughly, let me say 1 month. Even though you might think it's actually easy to just go to YouTube, look for it and learn it, there is difference in trading. The two differences, learning and doing it on the chart when you are trading. Those are the two differences. You can learn it, it looks so easy, but once it's time to do it on the chart, it might be different. So those are the basics you need to undergo before you can move into the next step. So the next step is going to be understanding technical analysis and fundamental analysis. So what's the difference between technical analysis and fundamental analysis? Technical analysis is like basically understanding price action and candlesticks, like hammer, engulfing candles, shooting star, doji, multiple type of candlestick. It's basically price action. And what is fundamental analysis? Fundamental analysis is like the news. Let's say the news, the war going on right now, Iran and Israel, they're both having war. So those could impact the market, and if they impact the market, there will be like heavy, there could be moves in the market and people can trade off it. So that's what fundamental analysis means. And technical analysis is not just simple. It takes a lot of good experience and time for you to be able to have a very, very good technical skills in the market. Technical analysis is just basic, like having your strategy, combining it, adding on other confluences, combining, making it into a different stuff. Like, let me say you have an engine and you have the part of the car. It's not complete. You have to gather everything and mix it up. That's what technical analysis means, basically. There's a lot of things that mix it up in the reason why you're taking it straight. And in technical analysis, with fundamental analysis, you can put those two together and it's going to produce something. And the technical analysis and fundamental analysis, when you put them together, they will give you enough confluences. Not everybody trade with fundamental analysis and technical analysis together. And when you have your technical analysis settled down, after learning your technical analysis and fundamental analysis, which is going to lead us to the next part, which is having a strategy. You can either create a strategy or learn a strategy from someone. So it's not compulsory for you to go and start creating a strategy. You can also take someone's strategy and refine it. Like me, when I was a beginner, I took Swaggy's strategy and refine it and make it work for me. It's not about just taking someone's strategy. You can take someone's strategy and it's not going to still work for you. There's a way you have to do it to make it yours. There's a way Swaggy trade strategy that I'm able to see it and understand that makes it work for me. So basically, that's what strategy means when you take it from somebody. So I took my strategy from my mentor Swaggy and I refined it and make it work for me, and it gave me edge over the market. That is what you guys should be looking forward to doing too. Getting someone's strategy with your own understanding on the market, mix it together and make it work for you. Or you can either create a strategy, and having a strategy that is profitable a long period of time, and the only way to know that is by backtesting, which is going to lead us to number 4. You must backtest whether you like it or not. You must backtest. Like my strategy, which I have few confluences to make on my strategy, which are support and resistance, multiple touch, Fibonacci retracement, and understanding of candlestick patterns. Simple as that. I don't need anything more to make me money. Like my Fibonacci retracement, which I learned from Swaggy, I still had to go test it to make sure it fits my criteria. You cannot just take someone's strategy without making sure it works for you. You have to make sure the strategy works for you if you take it from somebody. You have to make sure you are seeing the market as he is seeing the market, even though you might have a different perspective of the way you see the market and the way you see the market. But you're able to see the understanding on why this is why you believe this strategy works. That's what a strategy is. When you believe that this is the reason for you to have a strategy, you should be able to point out and say that because I put it here, I know that this is why it works here. Know every angle. Know that this is why you believe that this is why your strategy is going to work. That is a strategy. Simple as that. You don't need anything else to call it a strategy. Once you believe that and it has a reason why it works, is a strategy. As far as it works, is a strategy. Then you can create a demo account and test the strategy. Try 10 trade. If you have 7 out of 10 trade, you are profitable. Then next, try another 100 trade and see out of 100 trade how many trade you can win for you to decide that this strategy is profitable in the long run, and which is going to lead us to number 5. Number 5 is journaling. Why must you journal? For you to know yourself, for you to know this is why my strategy works, for you to know your good days, for you to know your bad days, to know how you feel when you take this trade. How did you feel now when you took this trade? Did you over risk? Did you have FOMO when you over risk? That's basically journaling. I did not use I back then when journaling was out and the people were saying you should journal, journal, journal. I did not like to journal. I'll be like, I don't really need to do it. But I learned something that is what you don't like to do. That's what you actually need to do. So I started journaling early this year. So it works. It works. Journaling works. You can be documenting your trade. You can have few confluences. You can put it in your journaling. A box. These few confluences you have is this support and resistance. Click. You have multiple touch. Click. You use your fib. Your fib is working. Click. Your fib is in position. Click. Simple as that. People have different strategy. They have different strategy, and this is why journaling is going to work for them. Journaling is going to tell them how they behave in when they are trading. How do they behave when they are trading? Journaling is one that's going to tell you. When you read your journal, you will see that you, when thinking about it when you are doing it, you won't notice it. But if you go to your journal and you wrote what you did and how you felt at that moment, you'll be able to see your mistakes. So that's why journaling is key, and this is why you guys need journaling to show you guys your good trade, and this is why your last trade worked, and this is why you lost in this trade. So that's why journaling is there. So journaling is a good part. You guys need to use it to trade too. So number 6 is going to be optimize for the best pair your strategy works on, because your strategy is not going to work on all pairs. You can probably check the pair you love to trade the most and put in the work, practice and perfect it and make it work on that pair. And it's not only that, you also have to check out which section does your strategy work to, because there are going to be more section that the market might have volatility for the pair you like to trade. Like me, I like to trade gold. Sometimes it's New York, sometimes it's Tokyo section. So both of them kind of work for me. So you guys can check it out on your pair and see what type of section your pair has more volatility in. So now, since you understand the basics, how you take your technical analysis and fundamental analysis is good, and you have a strategy, and you also backtest, and you also optimize for the best pair your strategy works on, the next thing is going to be having a good risk management plan. And why do you need a risk management plan? 1 is to keep your emotions stable, and 2, to keep your account from getting blown. So that's why you guys need a good risk management plan. You have an account, you risk 1% of it, you can risk 0.5% of it, you can risk 2% of your account. So have a good risk management plan. Probably you're going to a 1 to 3 risk to reward ratio. If this does not work out, the next one work out, you'll be able to hit a 1 to 3. You still made your money back. So that's why good risk management plan is needed in every strategy you have. Of course, good risk management plan keep your account from getting blown, but it's not as if your account cannot get blown. It can get blown if you take some bad decisions. Some days the market can get to you. You might increase the risks because of your loss. You're trying to make everything back, and boom, something bad happened. Or you could have a streak of losing and you blow your account. So it's not as if you can blow it, but good risk management plan help your trade. Helps you, it basically helps your account last more longer if you are a good. It helps your account last longer, and you will make money if you're a good profitable trader. But if you are not a good trader, it just helps your account last longer. But you're going to get it blown neither ways. But you are going to get it blown. You're going to get something exchanged. You're going to get experience in the market. So that's basically what it means. Remember, if you say you want to win and you are scared to lose money in the market, that does not make any sense, because you have to give something to get something back. Everything has to come at a price. Everything we do, the currency exchange, you have to give money to get something. You go into a supermarket, you have to give something to get something. If you want to go to heaven, you have to die to go to heaven. So everything comes in an exchange. You have to give something to get something. So you guys should not be scared to risk. Let's go. Hit it. Hit the risk, learn, improve. That's how you get there. Even though no matter how many times you risk, it does not matter how many times you risk, because as you keep risking, it's going to accumulate your knowledge in markets, going to build up. Eventually, you're going to start winning. You're not going to be losing forever. So, guys, that's a good idea. Have a good risk management plan and keep pushing. Demo trade 6 months, demo trade 1 year. Like, Trust me, that's actually good advice. That's actually very good advice. I demotivated for like 6 months. You guys should try it. That's a very, very good advice. So guys, if trading is your part, guys, lock in. Or if not, you have to clock in your 9 to 5. So me, I don't like to clock in, but I'm still clocking in right now. But all is good. I know that this trading is going to work out. So guys, this is it for this video. I hope you guys understand this 7 step. This is the 7 step I took to be able to get to where I am right now. And I was trying to like make a very, very big move, like push myself, and I'm already profitable. Like, it doesn't make sense. Just take the road step, keep climbing the ladder. If you look back, you see how far you've come. Trust me, I have seen how far I've come. I am more surprised. Like, I used to lose this amount. I don't used to make close to this amount. I lose more than what I usually make, and I'm making more. I'm happy. So guys, training is a very, very good skill. I hope these 7 steps help you guys get to where you guys are going. So guys, put in the work. Remember, you cannot just watch the video and just like relax. You have to put in the work to actually make it work. So guys, yo.